Thank you, Matt Nesto. So we've got oil prices falling once again today. Is now the time to move your money back into stocks. Joining us is Keith Springer of Capital Financial Advisory Services and Randy Bateman. He's Chief Investment Officer at Huntington Funds. Randy, I was very interested to see this just this morning. You took 10% out of your energy investments and you put 5% in technology and 5% in financials. So you're one of these guys who believes this huge run-up in the financials in the last couple of weeks means that the pain over there is over?
No, I'm not sure that that's necessarily the case. We always try to seek confirmation, though, in everything that we do. And we really did feel that this market is going to have some participation or perhaps even leadership by the financial stocks before it can really take off and start a bull market once again. We had seen a lot of flirting with a bottom, but in the last few days, as these earnings numbers started to come out, a few of the dividend coverage seemed to be quite good in a number of the regionals. We just felt that it was time. The confirmation has now occurred, and we are starting to add some exposure. We had moved to parity with the benchmarks a few weeks ago. Now we're up 5% over that.
Let me get Keith in here because, Keith, you don't like the financials yet.
No, it's just not time yet. I mean, you said it all morning, Sue. It's really all about oil. As oil's gone up, stocks got hammered. As oil's come down, stocks have rallied sharply. Financials just, I think, are just making a bounce. I wouldn't go near them for quite some time. Maybe the preferred's to get paid, but I think there's too much risk in financials much too early right now.
Hey, Randy. Yes. Is this the market bottom and we only go up from here? Are we going to go up and back down like a manic depressive day or something?
Well, this certainly has been a sawtooth market up to date. No question that the rest of the year will probably show some of the same trends. I do feel that we will end the market year better than we are today, but in the meantime, there's this specter of capital gains taxes and the dividend preference that might go away. This is going to hold the long-term thrust of the market downward until that comes to become a little bit more clear in the marketplace. But in the meantime, earnings are looking better. The economy seems to be better than many of the pundits have indicated in the past, and so consequently, we're not that terribly negative about the market going forward.
Okay, Keith, give me a bold verdict, baby. Only one way, yes or no. Is it over now for commodities?
No, commodities are going to come back strong. They're just taking a rest. You can't have a parabolic rise straight up in oil or commodities and expect anything. Trees don't grow to the sky. Commodities are taking a rest, hopefully for several months, because as commodities drop, the stock market's going to go up. But when commodities come back, oil, agricultural, then they're going to come back strong, and that's probably going to hurt stocks down the road. We've got to remember, we're in a bear market. This is not a bull market anymore. And in bear markets, you make lower highs and lower lows. I'm not saying you can't make money in this market, but you've got to be much more careful than a few years ago.
Okay, am I supposed to ping-pong back and forth, or should I just stay put and listen and write it all out? Do you want me to really switch back and forth and try to time that? That's crazy, right?
No, you don't time it individually, obviously. Okay. What you want to do is you want to hedge positions. You want to hedge inflation with some commodity plays, with some oil plays. I don't think you get back into oil yet.
Okay.
But as the stock market rises, you want to lighten up and just take some of the risk off the table.
Keith and Randy, thank you so much. We appreciate it.
Thank you, Sue.
Up next, tons of talk today about mortgage rates.